Welcome to the StockMentor.com studios here in the Black Hills of South Dakota. I'm your stock mentor, Brian Johnson. And we are about to enter, once again, a new week of trading. This is a full week of trading. Last week cut short a little bit by the 4th of July. However, end of this week is options expiration. We usually have a little bit more and expect a little bit more volatility during the course of the week. Stocks have a tendency to move a little bit more volatile. Man, it really all depends. Sometimes they are a little bit more active in the beginning of the week, slow down at the end of the week. Sometimes it's middle of the week. It's really anybody's guess. However, it's unusual that we don't see some kind of volatility by the time this week is out. Options expiration week happens every third Friday of the month. So people will be rearranging puts and calls and trying to get their new option set for the front month, which is going to go from July and now into August. Wow, middle of July already. Crazy. So what we see here, though, from the chart, so what I'm saying is expect some volatility. I usually like to play this with a little smaller position sizes. I like to day trade as opposed to swing trade. A lot of times the volatility tends to happen overnight, so you go to bed thinking you're pretty comfortable with that nice long position you took towards the end of the day, and you're down 13 points to start the next day. That's very common on days or in weeks like this. So let's just look at the charts and see if we can't set ourselves up for some potentially good trades as the week wears on. The Dow up and over this into this 10,200-ish area. Now I could tweak this line ever so slightly to get it right at 10,200. So let's just call it at overhead resistance at this point. Futures are not open. I can't give you any kind of direction as to where we might or might not open in the morning. Doesn't really matter in this case. However, if we look at it from an Elliott-Titian standpoint, this looks like a very clean 1, 2, 3 wave. Now, is this a 1, 2, 3, 4, 5? I would assume so, actually. So I believe there will be 5 waves to this particular move. But is it 5 waves of a new move to the upside? Is it 5 waves of a C wave, which is still corrective? Blah, blah, blah. We can go on and on about this. It really doesn't matter. The point of this matter is we want to be on the right side of the trade, regardless of what direction it ends up going. And in order to do that, we just have to watch the charts and take our trades as they're given to us. Now, we played this very well last week, actually, to the upside. Lots of good entries, got good breaks, got good opportunity to make some money last week. We're now kind of caught towards the top of a move here. So we will be looking for a pullback of some sort. It doesn't have to be a drastic pullback, and it doesn't have to happen tomorrow. We can continue up to this overhead resistance level, which is right near that 10,300 area. So if you want to look at moves above 10,200, then your next maybe minor is 10,250, then 10,300, and then above that maybe 10,350-ish or so. But ultimately, this 10,300 is our bigger overhead resistance area. That will be the point you'll be watching for if you want to maybe go long this market. I would like to see a pullback before that. Not sure we're going to get it. If we do, we're looking for something back maybe into this area here, but breaks back below 10,000 might be a little bit more bearish than what the bulls would like. From a daily standpoint, you can see how we're heading right towards what the 50-period moving average, which is where, 10,300. So I'm seeing good consolidation of support up in, or resistance, up in that area. Be watching that if we continue our upwards move tomorrow. Below us, the 10,130 area is the 20-day moving average. So 10,100 to 10,130 or somewhere around in there could act as very good support. That's where that pullback before the potential wave 5 up would then maybe stop. We could come back as much as 10,000, but once we break below 10,000, a little bit more cause for concern possibly from a bull side if that happens. NASDAQ on a 60-minute also heading its way up, looking a little bit weaker than the rest, but I think this 1833-ish area is very much a possibility at this point. I wouldn't see why not. Wouldn't see why we couldn't reach that area or come very, very close to that 1830 to 1840-ish area. So you can see lots of good overhead resistance there as well. With this climb to the upside, that's where I would expect to find a little bit of some stoppage in the movement of the price. If you are long, I would be very cautious coming into those areas. From a weekly standpoint, it will also try to continue to push its way back up and get towards this 1900 area. That would be a very, very good move for the bulls if it can reach that, either sometime this week or even over the next 2 weeks. It wouldn't matter. As long as it stays above 1700, the bulls have a chance here to really move this thing back to the upside. I know most of the world is bearish, and I know they keep talking about that stupid Head and Shoulders, but I am not sold on it yet. I'm going to let the charts tell me which way to go, and I'm not going to look too far forward. Let the charts tell you which direction to take. And right now, for coming off of last week, there's nothing really necessarily broken from a bear side here, but last week's movement was pretty good. I think there could be a little bit more bullish left in this move to the upside. The 60-minute on the SPX also coming into overhead resistance right there around the 1080, 1085-ish area. You want to wait till it gets above that if you want to look at long positions, then back to 1090 or 1100 area below that, or above that. Below us, we want to look at moves maybe back below 1070, potentially 1060 for the more conservative. That, I think, could take us right back into this 1045-ish area, so breaks below 1060 might be good for a good 10-15 point move. From a daily, also right at or just above the 20-day. This is the ultimate target here. Would be the 1100 mark. You got a little ways to go. It's still 23 points away, but certainly not out of reach. 23 points is nothing, especially with the move we saw last week. Now, keep in mind that we did drop off in participation. That is not healthy for the bulls, but that does not mean that we can't continue to slowly eke our way a little bit higher before this is all over with. We'll be watching Monday very closely for some direction. 1095-ish, 1090 to 1095-ish should act as very strong overhead resistance as we come back and retest this 50-period moving average at that point. The VIX on a daily also keeping up with the moves to the upside in the markets, and the VIX is moving downwards, confirming, but you can see we're in a consolidation pattern here. Looked at this kind of a little bit closer over the weekend. Just in a consolidation pattern here, which means moves up or down still very, very possible. Once we get back below about 22 in the VIX, though, I think we will see some further bullishness in the markets themselves. Apple on a 60-minute looking good here. I really like this look from an Elliott wave standpoint. Looks like a very clean 1, 2, 3, 4. Now maybe working on a 5 up, which means might be a very good stock to day trade over this next upcoming week. I love Apple, love to trade Apple, and I think I will be doing the same as well. For my subscribers, if I happen to get in, I will be sending out emails to you guys. So yes, you will get emails if I decide to enter this. Above 263-ish would be a good idea for some of you coming into the options expiration week. Keeping in mind this blue line above us, you know how I feel about that being retested as resistance, and support is obviously the 20-week moving average. FAS on a 60-minute also pushing its way up, looking very much like a lot of the other charts we have looked at. Over 23 being your more conservative entry to the long side, and below 20 being the more conservative short coming into the week. From a daily standpoint, you can see we have closed above the 20-day moving average, but I always give the bears, at least a day or two to kind of get themselves back down below that. We'll see if there's any consolidation by the financials tomorrow. If not, why not come back up here into the $23 mark, and then above that, right back into 24, 24.50-ish area. Absolutely, I could totally see that on the horizon, making for good $1 to $2 moves within FAS. FAZ would then fall below the 14.50-ish area. 1460 for the more conservative shorters might not be a bad trade to the downside. Coming back here into, you'll want to watch the $14 mark, followed by 1360 below that. From a daily standpoint, this break of the blue line is nicht sehr gut for the FAZ. The bulls are going to absolutely want to reclaim this area back above the 20-day moving average if they want to keep this big this move happening upwards. Look at this huge consolidation. It just makes me sick. The financials have gone nowhere for like 2 months. So you can see that they've just been sideways, literally sideways, making for good, an occasional swing trade, but really just good intraday trading. Once again, let me reiterate, that's how I prefer my viewers trade the FAS and the FAZ, not from a swing trading standpoint, but from a day trading standpoint, unless you really know what you're doing from the swing trading standpoint. Here we come into Monday. We will be watching that closely. As you can see, the market's leaving us kind of in limbo. Are we at the top of the third wave? Do we still have a little bit of of distance to go? Are we going to pull back before a 5-wave up? Anybody's guess at this point. So we will wait and see what we get with Monday's trading. I'll be back with you again tomorrow night with my assessment coming into Tuesday. Keep in mind, options expiration does add to volatility. We'll see where we open tomorrow and what the markets decide to do with this new week. Talk to you guys soon. Bye.